Commodity markets have seen some big moves. Gold and silver in 2026 have rallied like anything. India announced safeguard duty on steel prices. Japan, China, even India are buying precious metals, whereas the US are dumping those precious metals. How do you navigate 2026 in the metal segment? Hello everybody. So in today's video, I want to talk about, one of the biggest topics going around in the Indian markets, which is the rally in the precious metals as well as industrial metals that's happening. Commodity markets have seen some big moves. Look at gold and silver, or even zinc, copper, aluminium, etc. So what we'll try to understand in this video is what is driving that rally. Is there a huge amount of demand, and why is that demand coming? Or are there supply constraints and how those might impact? We'll also, try to understand what are the risks that are related to investing in these metals, and what are the key data points that you have to watch out for if you are following the metal segment. So it's a very interesting topic that's on everybody's mind, and I guess you'll get a lot of interesting insights from this video. So let's do a brief overview of the metals market before we proceed. There's a renaissance going on in the precious metals. Gold and silver in 2026 have rallied like anything. Silver year to date, and there's hardly been like 20 days in 2026, has rallied more than 30%. A very interesting phenomena is happening that a lot of Eastern central banks and retail investors, which means Japan, China, even India, are buying precious metals, whereas the Westerners, right, US, are dumping those precious metals. What you also see is that silver right now obviously is a store of value in terms of being a safe haven asset, but also it has a huge demand from the EV space, the data center space. So it has a mix of industrial demand and safe haven demand going for it. There are also a few supply constraints. First of all, you have big demand coming from AI data centers, right? But the mines which manufacture these metals or which mine these metals, they have been cash starved for a long time, so they might not be able to supply as fast as the demand comes. And in fact, a lot of this rally can only be explained by the supply constraint. There's a lot of interesting stuff happening in India also. India announced safeguard duty on steel prices, right? To stop dumping of cheap steel in India and to make Indian steel companies more competitive. Also, the currency in India, INR, is depreciating, and that plays in favor of the metal stocks. But as you see the demand coming and the supply constraints also playing out, there in fact could be legs to the rally. So let's start by talking about the key drivers of the rally. They're primarily your supply starvation and your monetary demand. The monetary policy, especially in the eastern countries like China, Japan, have really shifted, right? Where they are stockpiling precious metals as a store of value instead of the US dollar. And this can be really represented if you look at the growth of global PMI or the industrial production versus the growth of precious metal prices. You see that a huge divergence, right? So the metal prices are not growing because of increase in global manufacturing. They are growing because Eastern countries are rushing toward them. Secondly, there is a supply void, which means there are instances in Panama, Indonesia, where supply has been constrained. And mines cannot increase production to meet up with the demand. So the supply constraints are also playing out. These are the two primary drivers for the current rally. Now let's talk about a very interesting phenomena, which is the difference that we are seeing in the East and the West in terms of their demand for precious metals. In the Western world, especially in the US, you see that people are dumping the gold ETFs and the silver ETFs. In the Western geographies, they look at gold as an inflation hedge, and while inflation has cooled, they don't need that gold as much. In the East, it's a totally different scenario. So in Japan, because the yen has been depreciating for a very long time and the Bank of Japan is hiking the interest rates, while the yen remains weak, Japan is using gold as a hedge. In China also, they are buying gold as a hedge against the low yields present in the Chinese market. So you will see that there's a huge divide in how the precious metal demand is there among the Eastern as well as the Western geographies. And the primary reason for it might be all the divergence that has been caused because of the tariffs that have come in from the US. And that is also changing the picture on the demand for these precious metals. Now let's talk about the big precious metals, right? Silver right now, like we said, has been on a rally, right? It is up more than 30% only in 2026. It is an industrial precious metal, right? So it has characteristics of both. So it works as a safety trade, like people have a demand for gold. Similarly, they have a demand for silver for safety. And secondly, the industrial wave, right? Your data centers, your EVs, electronics, grid expansion, everywhere silver is needed as a key component. And while the supply hasn't been that elastic, right? The supply is constrained. This huge demand coming from both the fronts has, sort of led to a big rally in silver. Then obviously there has been a lot of speculation from retail investors on top of it. But what I find more interesting is what's happening in the industrial metals instead of the precious metals. Let's talk about the industrial breakout, copper and aluminium. Copper has seen a big breakout happening recently, and that is primarily driven by the demand coming from the electric grid, defense and AI systems. And the supply also, like we discussed, has been constrained by Panama and Indonesia in this space, which has led to rally in the copper space. Secondly, aluminium, it is going from strength to strength. Due to tariffs, the premiums in the US for aluminium have risen up, and a weaker dollar has also sort of impacted the costs. Right now, in fact, if you look at it, industrial metals might prove a great opportunity and one of the best things that you can hold in your portfolio. Let's talk about Indian steel next. So like we discussed, there has been policy changes in favor of Indian steel. The DGTR has implemented safeguard duty on foreign steel products. That is primarily to stop dumping in the Indian market. This is actually, retrospectively applicable from April of 2025, and it will be there for a duration of 3 years. You can already see the impact of this among Indian steel players. Rebar prices have risen, and even HRC prices have risen because of this impact. So it's a good news for steel players like Tata Steel and Jindal Steel, where you see a lot of brokers are in fact putting in their buy calls. There's another important factor to watch out in the Indian context is the depreciation of the Indian rupee. You can see the Indian rupee has gone up to 90 rupees against the dollar to even 91 recently. Unlike the previous such instances where rupee depreciated a lot, which was primarily because of oil, this time it is depreciating because of the FII outflow, as FIIs are dumping Indian stocks, that is leading to correction in the Indian rupee. But that actually helps the metal segment because it makes Indian metals cheaper compared to Chinese dumping, right? So it can in fact be a positive news for the metal segment. So what would be the stocks that might be the key beneficiaries of this particular metal rally? So while the precious metal rally is at a peak and has become a little bit volatile, there are a lot of interesting opportunities in the industrial metal segments. And one of the key players out there is Hindalco. A lot of brokerages have sort of raised the target price for Hindalco. It is a proxy for global aluminium prices, and as the LME prices rise, it is a proxy play that will work. Secondly, after the Novelis acquisition, the profitability has bottomed out for Hindalco, and people expect the margins to actually expand going forward. Also, the price that Hindalco offers is very competitive in India, and that will benefit the particular stock. There's a lot of opportunity in the ferrous plays or the steel plays also. Tata Steel and Jindal Steel are again, being picked up by a lot of brokers. Tata Steel, a lot of people have positive outlook because it gains from the safeguard duty as well as the volume growth. And you can see the production trend is increasing and a lot of brokers are picking it as a top pick. Jindal Steel is expected to give a very good quarter with their top line rising by 19%. There could be some short-term margin pressures, but the long-term story remains quite attractive for JSW Steel. There might be other smaller stocks like Sham Metallic or Usha Martin that can be looked at in the ferrous segment. Now there are some niche opportunities coming with this rally in Indian metals, and that would be graphite and refractories. So with India's green steel transition or electric furnaces, there is a big demand for companies like Graphite India and RHI Magnesia. As the electric arc furnace keep on increasing, that leads to higher graphite demand, which leads to a lot of benefits for these stocks. So these could be niche plays, sort of gaining because of this rally in the Indian steel segment. Now let's talk about the last crucial point, which is what is the risk of sort of buying into, especially the precious metals which have risen so much, and also the industrial metals. We all know metals stocks can be highly volatile, and you if you don't know that, go back and look at the Indian Metal Index. But apart from that, in the current situation, there are some key data points to watch out for. The first one is the Japan pivot. So while Japan has been very aggressively buying gold and silver to hedge against their currency depreciation, if the yen depreciation stops and the high rate yields in the Japanese market start cooling off, you will see that Japan would no longer need gold to hedge against those, and that could lead to a correction coming from losing demand coming from Japan, right? So that could be one of the things that could impact the gold and silver prices. The second could be the Chinese currency renminbi's re-evaluation, right? So, as China is holding meetings with the US, if a revaluation of the Chinese currency happens, that could really impact the precious metal prices. If the renminbi appreciates, that would impact the precious metal prices, but it again goes and benefits China, and that could indirectly lead to growth in industrial metals. So strategically, industrial metals look like a much more interesting opportunity. Finally, valuation resets, right? If you are looking at gold and silver prices, you have to be concerned about the valuations. There are a lot of relative ratios, for example, oil to gold ratio, which is at historic level, and there could be a point in time where people start seeing that valuation reset, even though in a momentum market, especially in the precious metals, people tend to forget about valuations. So as an investor, how do you navigate 2026 in the metal segment? First thing is that keep an eye out for the supply crunch, right? If you're seeing a supply crunch in silver, in copper, that could be a good time to sort of accumulate those stocks and gain from the supply side crunch. Second, I would say is, as the world is shifting towards safety of gold and silver, it might not be a bad idea to allocate to that, but you have to be careful about the valuation and the key data points, like I said, coming from Japan and China. Third thing is, look at the opportunity in Indian steel due to the Indian policymakers, and that is a good opportunity for you to look at. And finally, I would say is watch the USD yen prices very closely, watch the renminbi very closely, because those will impact the demand of gold and silver going forward. So is this rally that is happening a euphoric rally? Yes, but is this a rally driven by growth? No. Right, this rally right now is driven by a little bit of fear and safe haven demand, and also some supply side constraints, right? But that could actually play out for some time. So the bull market in metals could have some room to run, supported by the world that needs to build their grids and to sort of build their defenses.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.